banks already do community savings if you think about it.
Hmm.
Because when I put money in the bank, when you put money in the bank, they're using that money to lend it to other people
To other
anyways. So
people.
isn't that what community is? Instead of the banks dictating who the money is going to and where they're doing whatever they're doing, you have a community of 5, 10, 15 members who are choosing to put it in a pot and still lending out to the same people in the pot.
In the pot.
So you're
more
really doing the same
agency.
banking system at a more community private level.
Yeah, it's way more empowering and more agency, because then you're deciding like who, because why would I put my money in the bank for them to give money to the stranger, to borrow
Right.
money to a stranger when my neighbor needs the same support, or like someone in my community needs the same support. And I've never thought about it that way. Like, I'm just getting so much insights from this podcast today. Welcome to the Community Financial Wellness Podcast by Wolvio, that's supporting and empowering underbanked and underserved Canadians. I'm your host, Justina Kanza, Program and Community Manager at Wolvio. And in today's episode, I have the lovely Adiba, who will be talking to us about navigating the Canadian financial landscape as a newcomer, as an immigrant. So all things finance, from how do you open your first bank account, how do you build credit, how do you access credit, anything and everything that you need to know about the Canadian financial landscape. And so Adiba, my guest today, is a visionary financial consultant for 7 years and has been proud serving immigrant communities, making waves in the Canadian financial landscape. She was featured on CBC's The National as a top thought leader. Adiba is also dedicated to empowering millennials, especially immigrants, in navigating their financial journeys with a dynamic teaching style and a community to actionable outcomes. And you'll hear a lot of those actionable outcomes today. Adiba leaves a lasting impact on every partnership she forges and every community that she talks with. And her interactive workshops and thought-provoking speaking engagements like these are well sought after and are constantly helping impact and empower marginalized and immigrant communities. Thank you for being here with us, Adiba, today.
Thank you, Justina, for having me. I'm excited.
So, Adiba, can you tell us more about the work that you do as a financial consultant, especially the role that you play in helping immigrants settle into the Canadian financial ecosystem?
Yeah, 100%. So like you said earlier, I've been a financial consultant for almost 7 years, full-time for the last 5 years now. One of my niches is to help newcomers, immigrants, because I'm an immigrant myself. Even though I came here at a very young age, I've seen things happen with different families, my families, which I'm like, you know what? I've seen the trials and errors, so I can help people prevent the trials and errors. Because there's one thing you'll never get back is time.
Absolutely.
Right? So it's like, if we can bridge the gap of time for your goals or what you need to do, then your outcome as an immigrant, or honestly anyone in Canada, will be so much better. And that's where I come in, to pretty much, bridge the gap of knowledge between what they know and what they don't know, and then also create actionable plans for them to get to their financial goals, whether their financial goals be supporting themselves in Canada and building something here, or if it's to support themselves here and back home, because that's also a big thing with immigrant families, then I'm able to help with that.
Absolutely. And so you mentioned something about, your passion for financial empowerment coming from having seen certain things done, whether it's in your family and in your communities. And you're like, you know what, I know better now, so I can do better now, but each one teach one, right?
Exactly.
But what are some of those mistakes that you've seen immigrants make when it comes to navigating their finances in Canada?
Even I don't have a scroll, but so a lot. I think the biggest foremost thing is mindset. We have to understand North America is a credit-based system. So we have to learn that a credit-based financial system works very differently than, African countries and Asian countries where we don't really have a credit. We do have credit. There are countries with proper credit systems, but it's not a reliant credit system. There's no credit scoring or anything like that. So sometimes, back home we say, if there is no cash, it's not for us. You know what I mean?
Yes.
No cash, nothing. Like, we're not doing anything with loan. But if we can understand that when we come to North America, that you do have to start learning about using the credit system, that's very important. Because if we don't do that, that's the biggest mistake. If we run like the system back home, no matter where we come from outside of North America, it's not going to be as fruitful because the design of the system is just so different. Like that's the biggest mistake I'll put besides everything else. That's the root of everything.
Yeah. And why do you think like credit score is important? So for someone who's just moved, say, from Zambia to Canada to Toronto, why should they be looking out for their credit score, and what are the steps that they should be taking towards building that?
Okay, so reason is, like I said, we're in a credit system. I always say cash is king in North America, but credit is pharaoh. Like it is the ultimate, because here, even if you don't have a lot of cash, you can still get quite some credit. And here, when you're building assets, they deem your credit as your score for trustworthiness. So it's like they want you to take a loan, practice with the loan as you may please, build a trust, which is now called the credit score. And that score will now determine if I, as a bank or any financial institution, should give you any further loans to build an asset. Because like I said, here, cash is harder to build for large assets. So for instance, a home. If you're trying to get a home, yes, you're going to save up for the down payment. Almost no one can or will end up saving for the entire house cash. So then we have to leverage the financial institutions. So if we have to leverage, it is just, a black and white answer. We need the credit there, right? And I say when you come here, the first thing you should get, and they're going to hammer it anyways. They're going to tell you, hey, get credit. And there's so many programs for newcomer credit.
Yes.
But I wish every credit card came with a manual on how to actually use it.
Ooh,
right?
Yes.
Isn't it weird? They'll make you sign so many documents and terms and agreements, which is another thing. As a newcomer, no matter what document you get, even if it's 100 pages long, take it home and read the whole thing, please. Like that's one of the biggest things. As newcomers, we feel like this land is like amazing, which is a misnomer. No matter where, there's always fine prints, and we say devil's in the detail. And you're not trying to find the devil, you're just trying to find the details in this part. Just to know, awareness is better, and knowledge gives you confidence, right?
Yeah, knowledge is power.
Exactly, especially in action. So now you know how it works. Research about anything that you're getting, especially credit, and start building, even if it's with $500 credit, and use like the 5 factors that's needed to build the credit.
What are the 5 factors?
So the 5 factors are pretty much utilization, right? So usually financial institutions will tell you put 30% or less. Now, this is a very private information that a lot of people don't say, it's actually 10% or less to get really high credit score. So now someone might ask, like, how do I do 10% utilization on like $1,000 credit card? That's only like what, $100?
$100,
It's because of the second factor in the 5. It's you need you don't need, but they want you to have multiple different kinds of credit vehicles. So credit card is a type of credit vehicle. Line of credit is another type of credit vehicle, because interest is different structures. And then you can have a car loan, which I don't really recommend, but it is still deemed as something towards credit, mortgage, your phone bills. You don't build credit paying it, but if you miss it, if it's in a contract, it will affect your credit score, right? Because it does show up on your credit report. So variety of credit, utilization, having multiple credit is better than having one. If you can get like 2, like that's why I say, if any time you get approved for credit, like pre-approval, accept it. You don't have to use it, just accept it, because it actually helps in your variety. That's 2. 3 is your discipline. Obviously paying it on, the statement due dates and things like that. Some people like to do it in the middle of the month and end of the month. In Canada, honestly, as long as you do it before the due date, you're fine. America has some different rules for credit, which we sometimes conflict. We're not as fancy, unfortunately. Then you have inquiries. So you can't knock at the financial institution's door and ask for credit for more than 2 to 3 times every 6 months. Max, like do 2, don't even do 3. In a year, it's usually 2 to 3. So don't go and ask for, it's like going to a friend, like, hey, can you give me a loan? Hey, can you give me a loan? If you think of it like that.
Yeah. Then
so,
like they look at you weird. It's like, why? This is like the second time.
Exactly.
So don't do that at the same institution or at multiple institutions.
No, even if you do it multiple, the thing is, it's an umbrella. Your credit score is an umbrella anyways. No matter which institution you go to, the information is sent back to one place, which is like Equifax or TransUnion. In Canada, highly used is Equifax, which is like the credit bureau. So that's a big one. Inquiries. Don't knock on too many doors too many times. And especially with car loans, sometimes you can have like 12 knocks in one day, which is fine because they actually understand that they pinged a bunch of lenders when you're getting a car loan. That's fine.
Yeah.
So 2, 3. So we talked about utilization. We talked about don't knock on too many doors, inquiries. We talked about payment discipline. We talked about the variety. And the last one, which a lot of people don't look into, is your credit history. What does that mean? The longer you've had credit for, it's actually better for you.
Okay.
Like someone who just established their credit yesterday versus 10 years ago, most likely 10 years ago, they're just going to be happy. Mind you, the 10 years could have like a really low credit score, right? And yesterday's person could have a higher, but it's more chances to be keep at higher if you've established for a long time, which means do not cancel your credit cards. I'm not talking about like money mart loans or like retail loans, which is like Walmart credit cards or Canadian Tire credit cards. Those cancel once you're paid off. You really don't need those. But when it comes to the 5 banks in Canada, never ever. Because sometimes people get into debt, they'll pay it off. They'll be like to me, Adiba, I'm going to rip apart this credit card after I'm done paying it off. I'm like, no, don't do that.
Because, just don't use it.
Yeah, because remember, everything we do with credit is a communication. So when you do that, you're communicating that, oh, I'm not trustworthy anymore.
Or like I don't have the discipline to use this properly, so I'm just gonna get rid of it altogether.
That's what you're telling the institution.
I see.
So just think of it as like the best way to look at credit score is just think of it as you're building trust with your friend. Even though some people don't see financial institutions as friends, but see it that way. Because if I ask you for a loan, I'm gonna be very keen with it, right? And be more on top of it. So same way.
Okay, so number 4, inquiries. Can you delve into like hard versus soft inquiries? Because I've heard that before as well.
Yeah, that's a good one. So hard check versus soft check. Hard check actually, the reason why they say hard check is because they go through the entire system and security system to really see what you're all about in terms of credit score. If they need to do a hard check, again, they're using a lot of systems and softwares, which is why they're like, hey, if we have to go through all of this, it's going to be counted as you actually came and knocked at our door.
I see.
Right? Whereas we can look at soft check as like you just called the institution instead of knocking at their door, if that makes sense. It's a little bit easier for them.
I see.
Right? So for instance, there are platforms like borrowwell.com or Credit Karma. Borrowwell uses Equifax, which is the most closest to accuracy, and then you have Credit Karma, which uses TransUnion, which is usually overinflated. So if you want to feel a little bit happy, you could look at Credit Karma, but if you really want to get a reality check, look at Borrowwell. Yeah.
Or you can look at Wovio, because we have a credit monitoring feature that actually uses Equifax to give you access to your credit
so
score.
Equifax is the most accurate, so Wovio would give the most accurate. So if you want a reality check Wovio. Yeah, because some people don't want to check it, right? But it's good to check. At least I always say you can't measure what's missed.
That's true.
Yeah.
And you also like made such a great note on how like the devil is in the detail and how like read everything, because I've had so many instances where I'm like fighting, not really fighting because I'm not crazy like that, but I'm like arguing with customer service folks, because I'm like, I didn't sign up for this. They're like, you signed the document and this is in that. And credit cards is one thing. Like when we're moving from wherever it is, when I moved from Zambia, I had zero context on credit because it's not like a big thing back home. Like people do borrow every now and then, but not in the way that it's done here, where it's very heavily relied upon. And I remember like going to CIBC as a student, Scotiabank at the time actually, and this financial advisor is like, you can get a credit card for like $1,000, and I'm like young and eager and like naive. I'm like, absolutely. And I'm thinking that means like the $1,000 is mine. Like I get to just use it.
Right.
And I went there and I used it. And they're like, you haven't paid back in a while. I was like, well, you told me it was my money. Right. So just like knowledge is power, like understanding what does this mean, because the more you understand, the more you can even make more like financial decisions and distinguish like, okay, if I'm going to be paying interest fees, I'm going to be paying like banking fees, whose rates are better, right? What should I be looking out for? So one of the things you mentioned around like utilization, but also like having a diverse group or like, I guess, arena of types of credits.
Yes.
My question there is, what are some of the alternatives to traditional credit cards that people can look into, because these come with a lot of fees. And I think that's the fear that people have, especially when they're coming from communities like mine where credit is not huge, and it's sometimes demonized because like you borrow, you have to pay back with interest. And some communities, some religion like Islam, from my understanding, they don't even allow for that to be an option, right? So what are some alternatives that people can look into
to build credit? Yeah, that's actually a great question, because there's actually some non-traditional ways now. I'd say in the last 2 years, more have come out than before. Pretty much most of the fintech ones, if they're doing a credit building program, behind the scenes, they're usually giving an advanced loan, and then they're paying it back. But it's a guaranteed payback, but it's just in the system. One thing about Canada is you can do a lot of things on surface, but it matters what's happening behind the scenes. That's what gets reported. So it actually works in favor of the fintech company as well as the consumer, because now it's like an agreement. And then, of course, Wovio.
yeah. And I'll share more about that. But I really like the rent one because I recently came across a company called Payfi. It's spelled Payfi. And they do the same where they, like if you're a newcomer, they actually guarantee you for rent, because that's a challenge, like finding a co-signer. So they have some insurance policies around that.
That's amazing.
And they also help count your rent towards credit. But Wovio is again doing that and providing an alternative to credit building in a way that's, for me, is like very community focused, because as you know, we do what they call like rotating savings circles. Like they call it different things in different parts of the world. They call it Chilimba in Zambia, Paluwagan in the Philippines, or Chama in Kenya, but it's essentially a community of people, a group of people, however many, it has to be 2+, come together. Say 5 people come together and decide every month they'll contribute $10, and then they rotate who gets a payout. So it's almost like if you're the first person to get paid out, it's almost like an advanced loan almost, right? So if I'm the first person to get the $500 payout, when I've only put in $10, so I'm able to use that towards whatever financial goals I have, and then I spend the rest of 5 months or however long paying back by contributing the $10 to that community pool. And then what we're doing with our partnership with Equifax is we're counting that payout and that contribution, as a positive payment on your credit score. And then our app also has a credit monitoring feature, especially for premium members, which comes in very important, because our premium membership is like $10 versus if you have to monitor your credit score on Equifax, like that's about $28 per month. So it can be quite hefty. But you had made a great point around how people can access their credit report at least once a year from Equifax and TransUnion. What does that look like? How do people go about that?
Yeah. So Equifax is just once a year you can get a free report, because when you go to like things like Borrow Well or Credit Karma, it might show you a report, which is great to keep up. But I have seen time and time again with my clients that there's something showing on Credit Karma, but it's not showing in the true Equifax report. And I tell people this, that it doesn't matter what says where. When you get the Equifax report, if there's certain collections or certain loans that don't show up, it does not exist. Because sometimes people get overwhelmed and they're like, oh, what if I have like all these things that shows up on these other platforms? But when you look at the real report, that is what's truly being reported. So don't ask, don't tell. It's not there.
Yeah.
It's
also,
not there.
And also you get to know like what is truly impacting my credit score. Like if you look at the monitoring piece on, Credit Karma or Borrow, and it's saying you've got 500, it's like, why do I have 500? And the report gives you that detail, and you're able to know like if there's something that you should be disputing, if there's something that's incorrect. Right. Okay. Okay. So Adiba, I'm a newcomer. I just moved from, say, Fiji, because I do want to go to Fiji someday. So I just moved from Fiji. What's the first thing I'm doing? What are the first 5 steps I'm taking to set myself up for success financially in Canada?
Okay. Other than bringing your own Fiji water. If you're from there.
That would be really nice.
So wherever you are, you're saying before we come in or after you come in?
After you come in, I guess even before. If there's some
I think that's
stuff.
the thing we need to really talk about. I think a lot of we talk about what do we do once we come here, but a lot of newcomers can do a lot of research before they come in, and I think that's more powerful and more empowering to understand. But when you come here, you have to actually understand, okay, when it comes to opening up a bank account, it's really simple. I know in other countries sometimes it can take a lot of days. The easiest part is setting up accounts, your SIN number, your bank account, all those things, because obviously as a financial institution, they want you to put your money in there ASAP. because that's how banks make money. But it's very important to note where you're going. Don't just go on here and say like, oh, go to this bank or go to that bank. It's very important you go to the bank that has the most features for you. And that will depend. If you're coming here as an entrepreneur, you might go into like BMO because BMO has a lot of entrepreneurship programs, and Scotia has a lot of women entrepreneurship initiatives. Most newcomers end up going to CIBC, which is interesting. And then, if you're trying to build a lot of credit, TD is actually really good. And so is RBC. So they have a lot of good credit programs and stuff like that. So understand what your motive is. And it's okay to have even multiple bank accounts. And also understand in Canada, there's online bank accounts, right? A lot of times we only go into physical. There's also online. Understand there's fees with the bank accounts, which can deplete over time, but there's ways to get rid of it. Ask a lot of questions. That's very important. Another thing to keep in mind too as a newcomer, most other countries out of North America, the person you talk to in the front, like a teller, actually has a lot of power. Like they're the bank managers, like in my country, and I know some countries in Africa, when you go to like a bank manager, if you have a good relationship with them, they can give you loans. Here, it doesn't work like that because of underwriting processes. No matter how buddy you're with someone, it doesn't work like that. So we have to understand that individuals in an institution don't have as much power as back home they do. Which is important because sometimes they'll try to build a relationship thinking they're going to get a loan just because this is my friend who's a teller.
Yeah.
It's not going to work like that. 2, just because someone has a title in the institution doesn't mean they're going to actually help you. And I'll tell you this because both of my siblings are in the banking, they're both in banks, so the same bank. So an advisor at the bank does not mean they're an advisor because everybody has a quota. Like if it's in an institution, everybody has a quota. Financial advisors at the bank are only licensed to give mutual funds or give you credit cards. So if you're trying to really get bigger knowledge, it's important as a newcomer to go online and research. Because at the bank they have quotas to meet. So very important to
research. And it's so very important, I guess, to have community conversations like this. A lot of things that have come up is like knowledge sharing, like talk to people who've done it before, like what are some mistakes that I have gone through that I want to help you avoid it next time.
And also if you're going to ask for advice, go to people who are doing things you want to do. Because if you go to another immigrant who's not changed their mindset, don't do as they do. But if you go to an immigrant that you've seen are actually kind of living the life you want, or then actually listen to their advice.
Right. Like ask people for directions who've been to your destination. Correct. Not someone who's still like trying to find their way.
Yes.
I absolutely get that. Yeah. And then like getting back to, again, different forms, especially when we talk of credit and the value that it has here. And like talking about Wovio, how do you feel a platform like this can support immigrants in building their credit history and just setting them up for success financially?
I think it's really amazing because I've had a lot of clients who do like, a lot of them call it ASU and stuff like that in the community savings. And sometimes they found that sometimes people can pull out and stuff like that. There's no regulated way to do it, which I was kind of also against. I'm like, why y'all doing this? What if someone pulls out? Right. But because now there's a platform, I think it's more stringent. And on the technical side, but also on the qualitative side, it's beautiful because at the end of the day, if we really look deep at it, as I do with most things, banks already do community savings, if you think about it. Because when I put money in the bank, when you put money in the bank, they're using that money to lend it to other people anyways. So isn't that what community is? Instead of the banks dictating who the money is going to and where they're doing whatever they're doing, you have a community of 5, 10, 15 members who are choosing to put it in a pot and still lending out to the same people in the pot. So you're really doing the same banking system at a more community private level. That's how I see it. So it is powerful.
Oh yeah. And I've never thought about it that way. Like I'm just getting so much insights from this podcast today because it's way more empowering and more agency because then you're deciding like because why would I put my money in the bank for them to give money to the stranger, to borrow money to a stranger when my neighbor needs the same support or like someone in my community needs the same support. And we also don't get like credit building from putting money in our savings account.
Or in a debit.
This is an alternative. Absolutely. Okay. Well, as we wrap up, what are 3 key things, and you've mentioned a lot of things today, but 3 key things that you want an immigrant to take away today as they navigate the landscape here? What would be top 3?
The first thing is everything's a tool. which means it could be good or bad. If I give you a hammer, you can hurt yourself or you can build something for yourself. So when money is the same thing. When you're here, if you see everything as a tool for your end goal, let it be that. So therefore, research the tool, know how to use it, which is the money and every other platform that the money is used in this country. You have already been empowered and and you're expert of another country. It should not take you, like, you should feel confident you can do it in this country as well. And then 2, mindset, because it is a different lay of land, learn the rules of the game here to play it better, right? It's only a man or woman who know the rules of the game who are actually creating their own strategies. Because if you don't know the rules, you don't know how to create strategies. And if you want things that not everybody has, you're going to have to do things differently once you know the basics, right? And 3, create your goals as an immigrant when it comes to financial based on what you want. If your goal is to stay in Canada and build here, there's a way to go about it. Research that and talk to people who build well here. But if your goal is not to be here forever and use this country as a tool as well, which is another platform, because the country is a tool because of the currency, then you can use it to do things outside of the country. I think even as an immigrant, it's empowering to learn that finance is not local, it's global. And as an immigrant, we have power in that, in understanding, because we have knowledge of more than one place.
That is beautiful. And like, you're preaching to the choir, because I needed to hear that. Like, anything is a tool. What are you going to use it for? And talk to people who've used that tool before. Like, what are the ways that you've used this hammer? Have you used it to hit a nail? Have you used it to like pull a nail out? Hear different perspectives as well.
Exactly.
Amazing. And how can people connect with you? Because I know there's going to be so many questions and like your DMs will be full. How can people connect with you?
Yes, so people can connect with me through DMs and Instagram. I'm also on LinkedIn, Adiba Ahmed, CEO Adiba on all other social media platforms, YouTube, Instagram, TikTok. I post a lot more videos on TikTok. But in terms of reaching out, either you can email me, info@ceoadiba.com, which is in my socials, or just directly DM me on Instagram, CEO Adiba.
Amazing. Thank you, Adiba. Thank you, CEO Adiba, for being here with us today. You've taught us so much. You've taught me so much. So I really appreciate it. And to our audience that are listening and watching from wherever you are, thank you for joining us for today's episode. And I want to hear from you in the comments. What's something that Adiba shared that stood out from you? What more information do you want to get from Adiba? What questions do you have? But also for those who are, immigrants themselves, what are some of the strategies that you have used? What are some of the tools that you have used? Because as you know, at Warvia, we're all about community knowledge sharing. And so we want to hear from different people, different communities on how they've navigated and, created a foundation for a successful life financially in Canada. Looking forward to hearing more from you soon. But in the meantime, feel free to like, share, and comment. And I'm your host, Justina Kanza. Have a great day.